The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
What a week. Welcome to the COB. I'm Juliette Sarli. We got through the budget, we got through US PPI, US CPI, China's data dump, and where did we end up? Well, a little bit in the dumps ourselves. But remember, yesterday's market action was all about that near record high, so not really a bit of a surprise that you did see a downturn today. You can see there that the CBO 200 is ending the session off by 1%, the ASX 200 down by 0.8%, 7,815. I think most in the market would agree that's still a pretty good level, given that we had rallied quite hard up to that near 7,900 point level. Over the course of the week, when you look at the ASX 200 though, we actually were up by about 0.9%, and we're just about 1% off the 52-week high, so still looking pretty solid. Today though, of course, as we know, it really was about this changing of course. We did have a bit of a pullback coming through from US equity markets after the Dow had hit a fresh record above 40,000 and then pulled back on the close. And European markets also snapping that 9-day winning streak. So our market pretty much under pressure, apart from the materials, which were helped out by the fact that you've got iron ore high, you've got copper high, you've got that big rally coming through in the lithium players as well. Now, the China data dump was interesting. It's kind of just once again showing this lopsided view of the overall economy. I do need to refer to my cheat sheet to make sure that I don't get anything wrong, but we did see consumer spending slow down in April, so people aren't spending. New home prices falling at the fastest monthly pace in over 9 years in April, so this is despite the efforts by the authorities to really prop up the property sector, including the latest, which is really trying to pick up and buy some of these unsold homes. We saw property investment in China in the first 4 months of 2024 fall almost 10% from a year earlier. So that also shows that the sector is yet to bottom out despite all of this policy support. But on the positive side, you did see industrial production accelerate. I was talking to Gary Ng from Natixis just before the data was released. You can find that interview on our website. Of course, it is going to be somewhat backward looking because 10 minutes later we got the data dump. But I think what he was saying was just really important about whether or not we're going to see this 5% growth target that China wants. It's going to have to come probably from more support, including from some support to the MLF in terms of their rate cuts. And all bets are off. This is really interesting. We're following this story about Star Entertainment Group, and that was actually the stock of the day, which we'll get to a little later. But it's Queensland casino licenses. What word am I looking for? License suspension. They've been extended until the end of the year. They were expected to come out this month, but now extended until December for Gold Coast and Brisbane. And this is as regulators continue to look into, of course, the Sydney casino operations, the inquiry here into the culture of the group, finding it's not ready for a license in Sydney, calling the group leaderless and depleted. And at the same time, you've heard the Adelaide casino operator Sky City will pay a $67 million penalty to the money laundering regulator Austrac for breaches of customer identification and monitoring rules. So a bit of focus there, and that comes of course on the back of Aristocrat's numbers, which were really good earlier in the week. Let's have a look at some of the sectors, kicking it off with some of the IT players. They were under pressure today, Xero off by about 5%. In the healthcare space, normally an area where you see a bit of defensive buying on a day like today, but it was also a weak sector, down by some 2%. Interest rate sensitive stocks also came under pressure, that sector off by about 1.7%. But let's have a look at the miners, because I did mention they were a bright spot, particularly as we saw the iron ore price rally in Singapore. Rio up by more than 1%. Fortescue, I mean, everybody's got a buy on this, but it just continues to defy. Look at that, getting close towards its records again, $27.07. Let's have a look at some of the corporate stories, the top corporate stories. Bendigo and Adelaide Bank reported cash profit for the 10 months to April 30, dropped 2.3% to $464 million, shares up by 8%. Lendlease down, agreeing to sell its science interests in Asia to Warburg Pincus in a joint venture deal for $147 million. We mentioned Sky City and Star, and that's where they ended up over the course of the day. It is Friday. It is time for Shane Oliver from AMP. So much to talk about. Good to see you, Shane. I don't really know where to start. We haven't spoken to you since the budget, but I guess the China data dump is the most recent that we have seen. What is your thoughts on how the economy is, I guess, continuing to have this lopsided recovery?
Well, the data was somewhat disappointing. Industrial production surprised on the upside, and unemployment fell, but everything else was on the weak side. We saw retail sales particularly soft, a fall in fixed asset investment. Within that, property investment continues to deteriorate. So it's still looking pretty soft when you look at China. And of course, earlier in the week, last weekend, in fact, we got ongoing softness in consumer price inflation in China, falling producer prices, and of course, falling house prices. So overall picture in China is still pretty soft. That said, if you look at business surveys in China, the PMIs, they're sort of around okay levels. And that's telling us that overall growth is not too bad. And I suspect there's still a high probability we'll see more stimulus in China. So overall, not great, but far from the disaster that many had been expecting some time ago.
All right, well, let's get back to the big picture as well. I mentioned a bit of a pullback on the market today. Over the course of the week, though, you've seen all the US indexes hit records. We came close to a record. Is the inflation scare over?
Well, it kind of looks that way. It looks like a bit of a palaver. Lots of excitement in Australia over the last few weeks. Money market has gone back from factoring in potential rate hikes to, when I last looked a few hours ago, factoring in potential rate cuts later this year. And of course, the centre of that has been what's happened in the US. We saw 3 hot numbers, January, February, March. The April numbers were on the softish side, not dramatically so, but you didn't get that upside surprise. Yes, producer prices and import price inflation was on the upside, but if you look at the details there and put that together with the CPI, it looks like we're on track for what they call the core PCE, private final consumption inflation, on a core basis to have increased about 0.2% in the month of April, falling to 2.7%. So that sort of gets us back on track. And of course, you can see there the breakdown of the CPI, goods price inflation remaining negative. That's the green line. Services inflation, the blue line, excluding food and energy, remaining sticky. And of course, the overall picture is sort of stuck around 3.5%, but it's the monthly numbers of themselves were not as bad as feared by the market. So it looks like the market's getting back on track. After those numbers came out, it moved back in the US to factoring in 2 rate cuts this year. Prior to the numbers coming out, it was about 1.5 cuts. And it does look, I think the numbers are too late to give us a June or July cut. Almost certainly we're not going to get a June cut. July is possible, but you'd have to get some pretty soft numbers going forward. The more likely scenario remains a September cut. So it has been a messy ride. Similar story in Australia.
Yeah.
Of course, after those CPI numbers, we then had the budget. Economists debating intently about whether the budget adds to inflation or detracts from it, depending on which part of the budget you focus on. And then, of course, after that, we saw the softish wages numbers and, of course, softish jobs numbers yesterday. So that sort of reinvigorated confidence that by the end of the year, we will start to see cuts.
In terms of the overall budget as well, just on the fact, as you say, Jim Chalmers really trying to tread that fine line between potentially not annoying Michelle Bullock, but also doing his job as Treasurer of the country. Your thoughts on the migration story as well, because the opposition leader has this 140,000 net permanent migration plan.
Yeah, you've got to be careful if you say too much about migration. You get labelled a reactionary right-wing populist or something like that. I've been of the view that the numbers were a bit out of control. They need to get back under control. Immigration has been fantastic for Australia. We don't want to threaten that by having numbers too high, causing problems in the housing sector, which they have lately, then causing a backlash against immigration. So I think it does make sense to cut the numbers back. That said, the government is already doing that. 2 ways you can address the housing crisis. One is boost supply. This government has been quite serious about that with their commitment on the 1.2 million homes over 5 years. Unsure as to whether we're going to get that, but at least it's focusing on the right side. right things here, getting supply up. But they've also announced, the tougher measures to get immigration levels back under control, mainly in the areas where it's blown out recently, which of course is the student numbers, those with temporary long-term visas. So that will come under control, I think, and we're already seeing signs of a big decline in visa approvals. So as that feeds through, we will see the immigration numbers come down. Fingers crossed that will happen. Otherwise, it's going to look kind of messy for the current government. And then, of course, the opposition taking that a step further by saying we also want to cut the permanent numbers. So there's two components to immigration. There's those on temporary long-term visas, and they often end up staying here anyway, particularly students, and the permanent numbers, refugees, skilled migrants, and so on. They want to cut that back from 185,000 to 140,000. If you do all of that, the government, on their projections in the budget, NIDE were talking about getting back to 235,000 in a few years' time, stepping down towards that. The opposition's talking about knocking another 45,000 off that in net permanent migration. So you're getting down to around or just below 200,000 net overseas migration, which I think is probably an appropriate number to run for a while in Australia, because we still get the benefits of a pretty high immigration program by global standards, and immigration has been fantastic for Australia. But getting us back to around those sorts of levels gives us time to eat into the undersupply of housing, the cumulative shortfall, which is running, on my estimates, around 200,000 at least, and possibly 300,000, depending on what you assume regarding the number of people per household. So it's sort of, when you put it all together, it's going in the right direction. You just got to control demand and supply. That gets us back on balance. And then in the years ahead, once we've got the housing shortfall under control, we can then move back to what we saw pre-pandemic, which was around 250,000, 260,000 net migration. So it seems like both sides of politics are agreed we need to get the numbers back down, but there's still a long way to go. And also the budget did have some measures in there to boost housing supply, but unclear as to whether that is enough. And right now we're still way behind in terms of heading towards that 1.2 million homes over 5 years.
Yeah, well, it's been a big week. The budget has tired all of us, I think. I'm sure your lot, the economists, are very exhausted, Shane, but it's never a rest, because then we look forward. So what's on the radar for next week? We've got the RBA board minutes. We've got Fed Chair Powell speaking as well, RBNZ. What are you looking out for?
Well, the minutes are always interesting. They shouldn't be. They should just be a pretty clean summary of what we read in the statement of monetary policy heard from Governor Bullock and in the post-meeting statement. But many times they do surprise, and I guess economists will be looking to see whether they really have a neutral bias or whether it's still a tightening bias. I suspect it's going to be somewhere edging towards tightening, but this is where they were 2 weeks ago. And since then, we have got some softer data, at least in terms of jobs and wages. So they're always worth having a look at. On Wednesday, I think it is, we get the Westpac Melbourne Institute's Consumer Sentiment Survey. We'll get a quick guide as to how households have responded to the budget numbers. I suspect a little bit of a boost from the $300 per household energy rebate. But I suspect that consumer confidence is still going to remain fairly bleak, particularly given that only 2 weeks ago we heard that rate cuts are getting further delayed. And then, of course, as you mentioned, Powell in the US, always worth looking at. But I suspect, given his comments in the last week, that he's not going to say anything new. He'll just say, yes, the numbers have been higher than expected. We're going to have to hold rates where they are for longer. But he might also make reference to the most recent CPI that came out after his comments in the last week, which was on the good side, on the better side. And then there's a couple of, you've got the RBNZ. I think they'll leave rates on hold, but they're edging towards cuts later this year. And of course, I think we've got inflation numbers out of Canada. I like to watch Canada because it is a country that has similar issues to Australia, but its inflation numbers have been coming down a little bit faster. But it's quite conceivable that Canada, along with the Eurozone, will be amongst the first central banks to cut in the middle of the year, either June or July. So Canada is always worth having a look at and does provide some guide as to where Australia will go in the months ahead.
All right, Shane, final question. I know you're a Swiftie. What do you think of Taylor's new album?
Well, it's good, but it's
I'll turn it down and let you speak.
that song is nice. The start of it is nice. I did drift into the second half of Anthology, and I thought those songs were sort of songs that you release 20 years later in your career for further listening or something like that. That they did put me to sleep a little bit. But I mean, the thing I found about it, I have played it a few times. It does have good tunes in there, but I'm still lacking the boppy stuff that we last saw with Lover. And I'm kind of someone who likes boppy music. You know, there's this good documentary on SBS, I think it is SBS. You know, you can watch it on the TV now. I forget what the SBS program's called, where you can dial into it and get it because it's already run. But it's on Stock Aitken Waterman. So when I grew up,
yeah, you know, Kylie Minogue,
Mel and Kim, Bananarama had all these boppy hits, and every time I'd heard them, I thought, "Man, God, that's a fantastic song." That really boppy sort of stuff gets you all excited. And Taylor did have lots of boppy songs, but in the last 4 albums, they've been missing, and that still left me a bit flat. So I end up going back to the earlier Taylor albums. I'm not quite where The Economist magazine was. If you look a couple of weeks ago, they had a review and they were questioning whether Taylor has peaked. But I suspect that the person who wrote that review is maybe a little bit like me, wants the boppy stuff as opposed to the ballads.
Yeah, I think some of it might be that kind of, you know, tour when you go and get a drink or go to the bathroom. It's nice, but it's not going to get you to get up and dance, is it?
Get up and dance. I mean, it's a funny one. One of the Pet Shop Boys observed that they couldn't understand the Taylor Swift phenomenon, and they thought it was someone who goes on serial relationships and then writes a new song about each relationship. And maybe there is an element of that in there, and a lot of people like that. But I just wouldn't mind a few more boppy tunes in there. To be honest with you, if I was going to rate it, I'd give it, say, 6 out of 10, something like that, whereas I give Lover 9 out of 10, 1989 gets 10 out of 10. Red, that was one of my favourite ones as well. But yeah, it's not up there with the best Taylor Swift albums. That said, you know, you listen to it, and I've enjoyed it. It's just not as good as the previous album.
All right, back of the line when the new tickets come on sale, Shane. You've got to let somebody...
I'll be there. I'll be there.
All right, have a great weekend. Thank you as always for your insights from everything. Economics to
Thanks, Julia.
Taylor. Thank you. All right, let's have a look now at the stock of the day. Star Entertainment, Jonathan Takadina from MPC Markets and June Bailey from Tribeca Investment Partners.
From that, the indicators pretty much tell you it's going down. so there's no magic in the chart that tells you that you'd want to buy it anywhere. With this delay in the decision, why would you deploy capital there?
All right. And then in 6 months, you should see, pretty meaningful turnaround in terms of earnings, as well as the launch of the Queen's Wharf, where how much that Queen's Wharf they can sell and the like. And right now, it's pretty much valued at pretty much zero within the business. And remember, a lot of debt is actually sitting in Queen's Wharf, not inside the actual corporate business. So I'll put on a speculative buy. It is speculative, and then your investment horizon is probably about 12 months.
All right, let's have a look at the market leaders. The market has well and truly closed for the week. Bendigo and Adelaide Bank we touched on after its update. And really, it's these lithium players that are doing really well today. Liontown Resources up by 6.6%. Let's have a look at the losers in the big end of town, including Xero, which was down by about 5%. And when it comes to the small caps, I have a feeling we might see some repeats because some of those look like small caps to me. No, there we are. Sayona Mining down by 10.2%. And then on the other side, actually, Latrobe Magnesium is interesting. I spoke to the CEO this week. Fluence, Weebit Nano down by some 8%. And taking a look at what's happening overnight, we've got European CPI, the US Central Bank Leading Index, and a couple more speakers from the FOMC, including Waller and Daly. Having a look at what we are going to see next week, as I mentioned, With Shane, you've got the RBA meeting minutes from Tuesday. I love what he said, that they shouldn't be interesting, but they always are, i.e. they don't tell us everything that they probably should on the day of the meeting. The RBNZ policy meeting coming through on Wednesday. They had their inflation data out today. Home sales in the US, UK retail sales, CPI, PPI, and a few earnings as well. So you've got Webjet, you've got James Hardie, you've got Xero, you've got New Farm, Karoon Energy, among others. All right, let's have a look at where the market is tracking on the end of the week. We are down today. We had a really good rally yesterday. Remember, we got near records. We're off 0.8% on the S&P ASX 200 at 7,814 points. You can see there where the CBO 200 is tracking. And then I'll just tell you where we ended up in terms of percentage moves over the week. So over the last 5 days, the S&P ASX 200 up by 0.8%. So you wouldn't call that a bad move at all. All right, that is it for ausbiz for this week. We'll be back bright and early from 9:40 Monday Eastern Time. We'll see you then.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil,
Oh, hey, Ken.
here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better.
Still fine with it.
Use your racket.
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it.
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious.
Don't do that.
Ow.